Hi, welcome to the Market Alert for Monday, the 17th of April 2023. So from Friday, stocks and bonds lower as retail sales, bank earnings and Waller spoke. So we saw stock markets lower, bonds lower. Hawkish Fed speak and stagflation to scare sparks big reversal in markets, according to that headline, and recession odds jump as Fed crushes consumers. The Fed may be trapped between two potentially harmful outcomes there. Economic news for today, we've got Empire State and Lagarde speaking. As we go through the week, not too much tomorrow, but Wednesday is probably the big one of the week, and that's the UK CPI number. So we'll look at that in more detail as we get closer to Wednesday. But first, let's have a look at the stock market, see what they did during Friday. As it said in the headlines there that they were moved lower because of hawkish speak. So let's see what actually happened and what we can expect going forward from today. And kicking off in the Dow, we can see Friday's activity there. The market actually down, but then rallying off the lows once more. Market is above the 5-bar moving average. Momentum is still to the upside as far as the daily chart is concerned in the Dow. And we've got this 89 here that is stopping the market at 34,173. So the market's still looking fairly bullish there. In the 30-minute chart, we started with the market moving higher in the morning, and then when the Dow opened, the markets were pushed to the downside, and you can see they're trading down to the 200 MA. Buying came in, market retraced. We get the retracement there, and then up we go. And at the moment, we're currently finding support at the DP and the close. So the market finding a bit of support there in the 30-minute chart. It's been sideways all night, gone fairly quiet. Got the high just above here. That's just 150 points away, and that's Friday's high that you can see there. In the German DAX, also moving to the upside, bit of supply in the market. We are overbought at the moment, the market due for a correction. I'll come to that in just a moment. We can see that we've got resistance at 15,830 for Friday in the daily chart of the German DAX. And Friday, again, really quiet session until mid-morning. And then when the Dow came in, the market came back to the close, the 50 EMA, and then since moved off this on the overnight. We're above the close and the DP, so bullish, and we're also bouncing off the 20-bar moving average as well. In the 5-minute charts, again, you can see the overnight activity really quiet. I don't know if we're getting to the sell in May and go away, but the market's very quiet. And Friday as well, you can see they're stuck in a bit of a sideways range for this market. It still trades there, but very slow moving and quiet. Volatility dropping off after the last few weeks. And speaking of volatility, we can see that on Friday, despite the fact that the market sold off initially in the Dow, the implied volatility has dropped down to 12.64. This is a new one. We've not seen these levels for some time. So let's move out to a 6-month chart. And there you can see it's not even registering on there either. So going back 6 months, so we're going to go back 12 months or more. In fact, go back 4 years, as I've done here, just to actually have a look and get a good indication of where we're trading. So you can see back in 21-22, we got down to 11.33, 12.63, and this resulted in the market correcting shortly after. We've had a reasonable move back to the upside. We do have a bit of resistance there, and we certainly got the low in the implied volatility. Does it mean that the market's going to fall out of bed today? No, not necessarily. But it's just a precursor and a warning that in the event of higher prices and lower implied volatility, once you get that in extremes as we are heading towards now and are actually in compared to what we've had over the last couple of years, then be warned that there will be some sort of correction around the corner. So what you do is then use the price action in the daily chart to determine where that weakness is likely to come from and when it's likely to turn as well. So this sort of gives you the broader picture, the bigger picture, the background of the market, that something's coming, and then you use the daily charts and the technical stuff to actually work out where and when you could actually take advantage of this. So yeah, very interesting to see the volatility drop. I was expecting, when I looked at this on Saturday morning, to it actually gone up from from Thursdays, which we saw at 13.44. We went down to 12.64. So very interesting. And in the S&P, down on Wednesday, up on Thursday, up on Friday. Overnight market showing a bit of weakness there. 30-minute charts sideways all morning, and then we have the move to the downside to the 200 MA market retracing, and then stuck in this sideways move at the close, and the DP, and also the 20 bar moving average. The high not too far away, as is the R1 there. In the FTSE 100, also up, starting to look slightly weakish here. We're back at 89% retracement there at 7904 as well. So potential for correction. The market up on Friday, a lot of volume to kick off. We moved up and then we came back 100% plus retracement, then moved down to the high, which became a support. And then once again, we've retraced off this, spiking up on the overnight, filling the gap though to Friday's high. The market now in a sideways move there, looking to stay above that 20 bar, the close, the DP and the 50 MA. So there's lots of support here to send the market back above Friday's high and the R1 there. And in the currencies, GBP, JPY, you can see that again we've got resistance at the 78.89 area for this market. In the 30 minutes, actually just before I move on there, we're still moving to the upside. The market's starting to show a bit of weakness there, the momentum turning over. But if we can take out the 78.89 and then the recent high, we'll continue to move higher. And Friday, you can see there we sold off down to Thursday's low. We saw the volume come in, we were oversold, and then we were able to move the market higher. We've been stuck in a sideways move for the last several hours, but broken out in the latter part of trading in Asia there. We've gone through the high, the R1, and now stuck at the BRN there as well. In the pound, down on Friday, but up overnight, again way above the 20 bar moving average at the moment. And in the 30-minute charts, we were already moving down. Then the news on Friday sending the market lower, trading just below the S3. When we get down to S3, 90+% of the time the market will hold, and you can see they're also holding at Friday's low at the moment as prices try to get back above Friday's close. They'll need to get back above the 50, the DP, the psychological level, and the 200 MA there as well. So in the US dollar for Friday, the market bouncing a bit. Don't forget we've got that 101 area that needs to hold. Is it 101 or 100? Let's just have a look at the low on this. Yeah, it's the 182, 100.82, so 101. So you can see why the market's holding there, can't you? It's just wanting to keep that support. If it breaks that, then it will continue lower, as we looked at in Thursday's market alert there. And finally, in the metals, if the dollar was up on Friday, the metals were down, and they certainly were. You can see silver being slammed there, trying to get back above the 5 bar moving average in the daily chart on the overnight there. Let's have a look at Friday. Market down to the close, found support, moved higher, then the news came out, and then we had a retracement, and bosh, down we came. Market finding support as well. It's created a new low here, but the low of Friday it went through and has since come back, and you can see there's a bit of buying coming off the low there at the moment. Need to get above the close, the 200 MA, the 50 EMA, the psychological 2550, and the DP in order to move back to the upside. So quite a lot of resistance there in the silver market. In the gold market, same picture, market slammed but up on the overnight. So Friday, again, you can see very quiet till the news. Then the dollar rallies, gold is slammed, and overnight also you'll see there that we've come back, and you can see the buying coming into the market, trying to get it back above the close and back towards that DP, 50 EMA and 200 MA. So at 20, what's this level, 2015 is it? Let me just double check that. Yeah, 2015, there's a lot of resistance at the this price level for the gold market. And finally, in the gold-silver ratio, you can see that it's been a better couple of days, or certainly Friday for gold, didn't lose as much as silver. That's classic. And overnight, also gold showing a bit more strength than the silver price there. Okay, that's it for this one. Slow news week this week, so the market, unless there's anything of a geopolitical nature or the banking crisis returns, then we can expect the market sort of to remain sideways to higher as we head into as I said earlier, the obligatory sell-in may go away. So, yeah, we'll just have to wait and see. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.